Hey everybody, welcome to another 5-minute financial markets. Another bullish look today on the S&P. Bounced off the support, rallied into the close. Nice strong close back up to this 396 level. No reason to think that this strength won't continue into next week. This key level here, 393.16, that's where the market found a lot of support midday and bounced off of there. Why is that a key level? Well, if we look at the daily chart, going all the way back to June 28th. That's this green line here, 393.16. That was the high of the day for June 28th. So why does that matter? Well, this was a pivot after what at the time was the low for the year. We had this really strong rally for the next week and a half or so. 393.16 is where the market got to before the sellers came in and pushed it really hard down. This was a big down day. Market was down 2% on this big red candle here on June 28th. This level here, that 393.16, has served as resistance, support, 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 resistance, support. We blew up in August, came back down, tested again, support, support, resistance, support, 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 resistance, came back down to the October lows, came back up and retested, more support, and here, this is the key right here today. And let's zoom in on this because this is really nice to look at. This is that upward trending channel I've been talking about. Ever since we had the disappointing CPI number on October 13th, we've been trending upward, mostly in the top half of this channel. Right here today, we got to this low point right at the midpoint of the channel and rejected hard to the upside. This is a very, very bullish looking hammer candle. No reason to think that this bullish momentum won't continue into next week. I still say we get up to this 408, 410 level before we pull back. I say it happens in advance of this December 2nd non-farm payrolls report. That's what this vertical green line represents. Non-farm payrolls coming in on December 2nd. Here's what I think about non-farm payrolls, by the way. We've had a lot of strong jobs reports this year. I think this is going to be the first time that this year that the non-farm payrolls will finally disappoint to the downside. We've had a horrible earnings season, lots of companies announcing layoffs to try to salvage their stock price. The jobs market is finally starting to soften up. And normally that's a bad thing for the market, but here in 2022, we're in the bizarro world where bad news is good news is bad, because the Fed is trying to slow down the economy. The economy is too hot right now, and every time we get a strong jobs report, the Fed thinks, well, we got to tighten more, and that sends the market lower. When the Fed sees weakness in the economy, that tells them, okay, we've done our job, we can stop hiking, or at least stop hiking at the rate that we're hiking, and that's going to be good news for the market. I think this upcoming jobs report will be a good one for the market, but the question is it a report that's going to send the market even higher from here, or will it be a buy the rumor, sell the news kind of thing? If we have a big run up leading into that jobs report, does the market digest that and then take some profits and sell off? We'll have to see. Looking at the VIX, this is really key. So again, we've spent the whole year, like we've talked about in a couple of the other videos, we've spent the whole year with the VIX between this wedge. The VIX, of course, is the volatility index. It's the measure of fear in the market. The higher the VIX is, the scarier things are, and the more likely the market is to drop. We like to see, for a healthy market, a VIX below 20, but right now we'll take 23. Main thing is, it is outside of this wedge, spent the entire day outside of this wedge. It's the first time in a long time that it's done that. We'll see if it confirms outside of this wedge on Monday, which I suspect it will. And if it does, that indicates smooth sailing, at least in the near term, for the markets. Let's take a look at crude. So we looked at crude yesterday, had a big 4.5% sell-off yesterday. Came down to the support level here. Today it sold off hard again, but look at what happened. Sold off hard and then rejected off this level, came back up and closed up near the top half of the day. That is another very bullish sign for crude. That's a bullish hammer candle. That tells you that this could possibly be a near-term bottom, especially on this high volume. Watch for crude to retrace back up to this level, and then we'll see where it goes from there. I think the near-term bottom is in for crude, though, at least for the next week or two. Finally, I want to take a look at gold, which we haven't talked about yet on this channel. gold has been very exciting the last couple of weeks after a really disappointing year, at least after the first month or so of the year. Had a big run up in the first month and then has just been straight down since then. But this last couple of weeks, it's shown some signs of life. It hit this downward sloping resistance line, which it actually broke through earlier this year in August and then rejected back down. Broke through it again right here a couple days ago, rejected back down. So does that mean it's going to come all the way back down to the 1675 support level? Could be. It's really all going to depend on what the dollar does. So you see that while gold has been running up these last couple weeks, the dollar has been selling off. That's because the dollar and gold are usually very strongly inversely correlated. So if you look at this correlation chart down here at the bottom, this is the correlation between gold and the US dollar. Most of the time it's a very negative correlation, meaning when the dollar is strong, gold is weak, and vice versa. It spends a lot of time right down here at basically a -1 correlation. So what happens next with gold is really going to depend a lot on what happens next with the dollar. Dollar has shown some weakness the last couple of weeks, but it has found a little bit of support here. So does it roll over and head lower, in which case we can expect gold to head higher, or does it retrace, get back up to this, support level and figure out its next move, in which case gold probably sells off and heads back down to this 1675 support level. Well, that's all I got for today. See you guys next time.